BAT plans to sell part of its stake in ITC Hotels through an accelerated book build block trade to investors. In capital markets terminology, this transaction is best described as which of the following? Your options are: A. A primary equity issuance by ITC Hotels to raise fresh capital for expansion. B. A secondary market block sale of existing shares by a current shareholder to new investors. C. A mandatory open offer triggered by a change in control of ITC Hotels management. D. A rights issue in which ITC Hotels offers new shares pro rata to all existing shareholders. And the correct answer is option B. A secondary market block sale of existing shares by a current shareholder to new investors. BAT states that the proceeds from the ITC Hotel stake sale will support progress towards its target leverage corridor of 2 to 2.5x adjusted net debt or EBITDA. Which corporate finance concept is most directly reflected in this statement? Your options are: A. Determining the optimal working capital cycle for day-to-day operations. B. Setting a stable dividend payout policy for equity shareholders. C. Managing the firm's capital structure using a target leverage range. D. Computing the sales break-even point for BAT's tobacco business. And the correct answer is option C. Managing the firm's capital structure using a target leverage range. BAT's CEO has stated that a direct stake in ITC Hotels is not a strategic holding, and that BAT has no interest in being a long-term shareholder in a hotel chain in India. From a corporate strategy perspective, which of the following best captures this intent? Your options are: A. Divesting a non-core business to sharpen focus on the core tobacco portfolio. B. Undertaking backward integration into hospitality to secure room inventory. C. Pursuing unrelated diversification to spread sectoral and regulatory risks. D. Executing a hostile acquisition to gain control of the Indian hospitality market. And the correct answer is option A. Divesting a non-core business to sharpen focus on the core tobacco portfolio. ITC Hotels became a publicly listed entity after being demerged from ITC, and BAT's direct shareholding in ITC Hotels arose as a result of this demerger. Which corporate restructuring mechanism does this most accurately exemplify? Your options are: A. A leveraged buyout (LBO) of ITC Hotels funded primarily by high-yield debt. B. A management buyout (MBO) of the hotel business by ITC Hotels senior executives. C. A demerger or spin-off creating a separately listed company with proportionate shareholding. D. A share buyback program initiated by ITC Hotels to repurchase shares from ITC. And the correct answer is option C. A demerger or spin-off creating a separately listed company with proportionate shareholding. BAT's leadership has mentioned that they will sell the ITC Hotel stake at the right moment to maximize shareholder value. At the level of the board and top management, which governance responsibility is most closely associated with such decisions on timing and execution of divestments? Your options are: A. Designing standard operating procedures for front office hotel operations. B. Administering routine HR performance appraisals for hotel employees. C. Managing tactical sales promotions and discount schemes for hotel room bookings. D. Exercising fiduciary duty in capital allocation and portfolio restructuring decisions. And the correct answer is option D. Exercising fiduciary duty in capital allocation and portfolio restructuring decisions. BAT refers to a target leverage corridor of 2 to 2.5x adjusted net debt or EBITDA and links the ITC Hotels stake sale to progress towards this band. In modern corporate finance practice, this kind of leverage corridor is best understood as. Your options are A. A legally binding covenant imposed solely by bank lenders. B. An internal financial policy range used to guide balance sheet and rating decisions. C. A mandatory statutory cap on leverage set by securities regulators. D. A project-specific hurdle rate used for capital budgeting decisions. And the correct answer is option B. An internal financial policy range used to guide balance sheet and rating decisions. BAT earlier sold a 2.5% stake in ITC and is now planning to sell 7 to 15.3% in ITC Hotels, while clearly stating that the hotel stake is not a strategic holding. From the perspective of corporate portfolio management, this sequenced pattern of stake sales is most consistent with which of the following approaches? Your options are A. An orderly, staged divestment plan to exit non-core equity holdings over time. B. A partial recapitalization strategy to inject fresh equity into ITC Hotels' balance sheet. C. A greenfield expansion strategy into the Indian hospitality sector via minority stakes. D. A defensive consolidation strategy to retain long-term control over ITC Hotels. And the correct answer is option A. An orderly, staged divestment plan to exit non-core equity holdings over time. A large shareholder like BAT announcing a plan to sell 7 to 15.3% of its stake in a listed company, ITC Hotels, can influence how other investors view the stock. Which concept from equity markets best captures the potential downward pressure on the share price due to expectations of a sizable future sale? Your options are A. Control premium. B. Arbitrage pricing. C. Liquidity squeeze. D. Overhang risk. And the correct answer is option D. Overhang risk. Reports suggest a specific deal price for the ITC Hotels block and also mention the prevailing market price on the exchange. In block trades executed via accelerated book builds, the negotiated block price often differs slightly from the last traded market price. Conceptually, when such a block is priced at a modest discount to the current market price, this discount is most appropriately interpreted as. Your options are A. A control premium paid by incoming investors for gaining strategic influence. B. A regulatory penalty imposed for rapid disposal of a large shareholding. C. A placement discount compensating investors for size, execution, and short notice commitment. D. A mandatory statutory rebate granted to institutional investors under listing rules. And the correct answer is option C. A placement discount compensating investors for size, execution, and short notice commitment. Post-demerger, ITC Hotels has ITC holding about 39.85% and BAT holding 15.3%, with the rest held by other investors. From a corporate governance and ownership structure standpoint, ITC's nearly 40% stake in ITC Hotels is most appropriately described as. Your options are A. A completely passive, non-influential financial holding with no strategic role. B. An anchor shareholding that can exert significant strategic and governance influence without full control. C. A fully controlling ownership position equivalent to 100% economic and voting rights. D. A purely short-term trading position with negligible impact on board dynamics. And the correct answer is option B. An anchor shareholding that can exert significant strategic and governance influence without full control.